Hey guys, Dave Keller here with Market Misbehavior. One of the key tools in the technical toolkit are support and resistance levels. This is one of the basic ways that you can look at the market history, look at the history of price data for a particular stock or ETF, and look at where previous market turns have happened. Where have buyers and sellers exhausted? Where has a turning point occurred? And by looking at some of those historical peaks and valleys, you can draw some conclusions about where the stock may turn going forward. So today, we're going to talk about support and resistance levels using a payment processing name you probably are familiar with, PayPal. So today it's about support and resistance. So my show on StockCharts TV is called The Final Bar. And one of the reasons why we named it that, two reasons actually. First off, for the musical reference of The Final Bar. I'm a musician, and having a name of a show that had some sort of implication from the financial markets, but also, as a nod to my experiences as a musician was a huge win in my book. The other one is because when I describe looking at charts and I describe chart analysis, I always tell people to start with the final bar, start with the current bar, the most recent price data, and then look to the left and look at where we're at relative to where we've been. Where are the peaks and valleys in price going back? And that can help you start to make assumptions about where the price may turn going forward. What we'll do today is look at one particular stock, PayPal. We'll talk about the payment processors, but this name in particular, and how support and resistance levels are so crucial, how they've become very important in the last week or so, but also why they are certainly going to be important going forward as you understand or anticipate the long-term trends in PayPal. Before we get to that chart, I just want to remind you, if you appreciate this sort of thinking about market history, technical analysis, behavioral finance, decision-making, trend, momentum, breadth, sentiment, all of that good stuff, I hope you'll subscribe to my channel. It'd be great to have you along this ride with us. Also, give the video a like if you appreciate it. We would very much appreciate that back. Finally, put a comment below the video. What do you think is next for PayPal? Do you think it gets above 310 and continues to further upside? Or does it break down below 230, below the 200-day moving average, and continue lower? And why? Let's get to the chart. All right, so here we're looking at the chart of PayPal, ticker PYPL. The reason why I picked this stock, by the way, is because I hosted an episode of The Pitch recently on StockCharts TV. The Pitch is a show where we have a moderator, which was myself. We have 3 guest experts, and they each pitch 5 tickers. They can pick any U.S. stock or ETF, and they pick 5 of them. They have to pitch those names, 2 minutes each, and then at the end we discuss them as a group. And what was interesting is when we recorded this event, this most recent Tuesday, all 3 of the guest experts that we had, they don't talk ahead of time, so they just pick the 5 things that they want to highlight. All 3 of them picked one stock in this same group, which are what I consider the payment processors. One of them picked MasterCard, one picked Square, ticker SQ, and the third one picked PayPal. So that's a fascinating group because there was obviously a confluence of interest from these 3 expert panelists with 3 different toolkits. It was interesting they were all drawn to this same group. Now, they were thinking about the long-term prospects because we were trying to talk about, through the course of the year, and certainly long-term, there are fundamental reasons why this group could do well. But from a purely technical perspective, I thought this was a great opportunity to talk about 2 things. Number 1, the importance of support and resistance levels. Number 2, what it can tell us about the trends in PayPal, the potential uptrend exhaustion signals that we've had just recently, and what that might mean for the broader market as well. So here's a chart of the PayPal for the last 2 years. So we're going back to the end of July of 2019, and you can see, of course, the familiar low here in March of 2020. You can see that rallied up into early September, stabilized along with the rest of the market, broke out to new highs, really accelerated to a high in February. Then from there, it's been relatively stagnant. This is when PayPal really started to underperform because a lot of the cyclical sectors, banks and others were really rallying March into April, really into May. From there, those cyclicals really have rolled over. You can see PayPal has reasserted itself, broken above the April high, aiming back to the February high, relative strength improving, overall setting up very, very well. Here's the thing, though, as we approached back up to 310, what I always coach people is look at the current price bar and look to the left, right? Start at the final bar, look to the left and see what levels have been meaningful historically. And if you did that, we're going to annotate the chart here very quickly. If you did that, you would find this particular level here. Let's make that a little thicker so we can see it. Here's the high from February, where you can see that we traded right back up to that level there in early July, and then again here about a week or so ago in mid to late July. So we have a level of resistance. We've now reached to that same level. The reason why resistance tends to work is because what a lot of people will do is look back at the chart and see where the chart has found resistance. If enough of us assume that there will be resistance there, in some ways it could be a self-fulfilling prophecy, right? If we all expect resistance, we all take profits or put in a sell order, that activity on its own is going to create the top. The anecdotal reason why resistance most likely works is, let's assume people bought into the end of this move in February. They bought going into the top, maybe they bought a little after. From that moment on, they've been underwater this whole time, right? It's been a negative return. It's been a weight on their performance. Finally, you get back to the zero, you get back to break even. You're so thankful to not be losing money in PayPal anymore. You take profits and get out, and that selling of those new positions is what causes the price to go down. So what actually causes it? There are a number of reasons, and at any time in any chart or in any stock, there are many reasons, many investors motivated by very different things that are taking action. But those are the literal reasons why a stock could top out, and then an anecdotal reason that it's sort of the anecdotal buyers that bought right at the top and are now made whole again, are so thankful for that they start to sell again. To be honest, though, I have found, again, it's one of the basic toolkits in technical analysis. So many investors and traders use those levels. Think about support and resistance levels. Think about key levels at which they need to pay attention to a particular stock, key levels at which you might expect other buyers and sellers to come in. So many people rely on those, and I'm confident, at least to some degree, on liquid stocks for sure, that it is a bit of a self-fulfilling prophecy. So now what? As you probably know, PayPal had a disappointing earnings report this week, has come off a little bit, now trading below its 50-day moving average for the first time since May. So now what? Now we actually get into the support level. So if we go to the same thing, we're going lower, we look to the left, we can start to see sort of this range. I'm going to put in a couple different lines here. And actually, I'm not even going to put a line. What I'm going to do is actually put a kind of a rectangle-y kind of thing. When you're talking about support and resistance, I think many moons ago, when stocks used to trade like on an eighth, I think you could assume, all right, think something's going to hit this particular exact price point. It's going to hit $230 even, and then it's going to bounce. And I think a long time ago, you certainly could rely on that, because there were only 12.5 cents between each, trade at the very least, right? So there were only 8 points between $1 that you could actually trade a stock. And so it was much more reliable that things could hit exact levels. Now that we're trading at sub pennies, I tend to think more in support and resistance ranges and less as particular values. I think expecting something to hit an exact dollar cent of value is assuming a granularity and a precision to investing that is just not how reality plays out. So a support range is what I'm highlighting here, while the resistance really was very, very close to almost the same exact price level. Here we see a bit of a range, right? You can see the pullback in January, again, late January of this year, again in March, late March, mid-May a couple times, all sort of in this range, sort of 220, we'll call it, to 230. So the key is, if we would continue to go lower, if we get down, we break down through the 200-day moving average, now we're entering into a key area of support, a level, a floor in the markets, a level below which we've been unable to go. The idea here is value-oriented investors, people interested in buying a relative weakness, will have noticed that the stock comes down to this point, and buyers have consistently come into the market at that point, really starting in January. That has been a pretty consistent place where sellers are exhausted, buyers are coming in, or there's more demand than supply, however you want to describe it. It's causing the price to go back higher. So at this point, it's actually one of the more easy charts to make sense of, because you have a clear range. We now have a clear ceiling or resistance level around 310. We have a clear support levels really starting around 230 or so. And again, at some point, we have to break out of this range, break above 310 and break below 220, we'll call it. And in general, when in a range-bound environment like this, you would often expect that whichever way we break eventually out of that range, that should be the direction of momentum going forward. If buyers finally can push the stock above 310, it has a lot of potential to continue further. If sellers are able to overwhelm the stock with enough selling pressure to put it below 220. There's no one, whoever's left to buy is no longer really interested, and people are fearful of it going lower. People are more interested in protecting their capital, and as a result, the price tends to go lower. So that's a basic premise of support and resistance, basically starting where we're at, looking to the left and focusing in on key levels. Now, which levels do you do? It is very much in some ways a subjective point of view, but I would say in general, look for the highs that are surrounded by lower highs that are sort of sticking out, a peak on the price. Look for valleys on the price as well to find support levels. Look for lows surrounded by higher lows that are sort of sticking out below the price action. And if you look, you will get very comfortable with identifying key support and resistance levels. And the more charts you look at, I think you'll find that it often happens. And again, an example of that, finding resistance and then breaking out, is on the same chart. If you look at September of 2020, same level, October of 2020, same level, December of 2020, then you finally broke out of there. And that was the signal that the momentum was overwhelmingly positive, able to propel the stock above previous resistance. Very bullish signal. So at this point with PayPal, I get the long-term constructive argument, and overall it just broke its 50-day. It's still above its 200-day moving average, but I'd certainly want to see it break above 310 to indicate that influx of momentum. If it goes further, you certainly look for the lows there. One final comment, by the way, another video on my channel here was dealing with Fibonacci retracements. And by the way, Bitcoin is actually a beautiful place to think about support and resistance. It's been very helpful. Also, for Fibonacci retracements, if you take the March 2020 low, connect that to the February 2021 high, you can see that lines up with this sort of 225, 220 level or so, which was the low we found in March. We then bounced off that a couple times. So if we would come down, you now have the first Fibonacci support level, which lines up with the previous lows right around that 220, 225 sort of range. So I would say fairly confident that would be a strong area of potential support. So that, in a nutshell, is how we apply support and resistance levels. And again, we're using one of the payment processors, PayPal, because in an episode of The Pitch that I recorded earlier this week, had a great discussion with 3 experts. You can find that on the StockCharts YouTube channel, and they all picked a payment processor. One of them picked PayPal. It's come off a bit with earnings this week, underwhelming earnings results. And I thought it was a great example to sort of show how the resistance level of 310 has come into play yet again this week, why we pay attention to historical highs and lows, because they will often come back. As one of my mentors used to say, the market doesn't repeat itself, but it often rhymes. I hope you found this interesting. If you like this sort of thinking about charts and technical analysis, behavioral finance, trend, momentum, all of the above, if you find that of interest, subscribe to my channel if you could. It'd be great to have you along this journey. Also, give the video a thumbs up if you appreciated it. We would appreciate that very much back. Finally, put a comment below the video. What do you think is next for PayPal? Do you see a break out above 310 first, or do you see a break down below 220 first? Which of those is going to happen first, and why? From everyone here at Market Misbehavior, I'm Dave Keller. Be well, stay safe. Talk to you again soon.